Good morning, it's Jeff Christian, CPM Group, shortly after 10 o'clock on Tuesday, the 12th of April here in New York. I wanted to talk about inflation and the war in Ukraine and the effects that the war is having on commodity prices to some extent. Sort of go over those things. US CPI came out today, this morning for March. It was, as we expected, pretty high. I'll run through some numbers on that. And then I wanted to show some charts on petroleum and wheat to see how it is. You know, the gold price and silver price, but the gold price was up about $11 this morning from where it had been on Monday. That reflected the fact that the battle in Donbass is apparently starting to heat up, and the Russians and the Ukrainians are starting to move toward war. And also the concerns that the war will become much more nasty and much more focused on using illegal weaponry, if there is not that much of an ironic sequitur there, and chemical warfare and things like that. When the CPI came out, the gold price rose another $14. So it's up about $25 on the day so far as I speak, partly reflecting the effects of the war and partly reflecting the concerns about inflation. As we have been saying for some time, inflation, interest rates, and war were the big three factors in the first quarter, and they'll be the big three factors affecting precious metals prices in the second quarter. Looking at the March CPI, it was up very high, 1.2% on a month-to-month basis, and that's really the best way to look at it because that shows you what exactly is happening within the most recent month. We're not that surprised by it. In fact, we thought that it would be very high, partly because March of 2021 still had low prices. And if you look at it on a year-over-year basis, there are a couple of interesting points in this chart. First off, you're measuring March 2022 price levels compared to March 2021. And you can see that in March 2021, core inflation was still running about 1.6%. And you had already started to see the non-core, all items or headline inflation data rising, and it had gotten to about 2.6%. The increase in March in the headline was primarily related to petroleum-based fuels, so gasoline, fuel oil, heating oil. And if you go back to March of 2020, you had very low oil prices. And in fact, the spot April contract at one point fell to zero or negative because of a surfeit, or rather a shortage of storage in Cushing, Oklahoma, where WTI-based oil is stored. So March of 2021 was pretty much the last month of low inflation. We started seeing it pick up more sharply in April, May, June, July, August, September. The third quarter of last year was kind of flat, high prices, but not rising that much, actually declining on a core basis, ex food and energy. And then since the fourth quarter into the first quarter of this year, we've seen both core and headline inflation rising very sharply. You can see here that there's been a divergence in the March data, and headline inflation rose very sharply to about 8.5% on a year-over-year basis, but core inflation was relatively smaller. It was about 6.5%, which was roughly the same, slightly higher than it had been in February. As you go deeper into the CPI, what you'll see is that if you look at all items, food was actually relatively low increase, about 1% on a month-to-month basis. And most of the increases that you're seeing were in oil-based energy prices in March. And on a month-to-month basis, The big increases were in oil-based energy prices, electricity, natural gas were not all that much greater. And then again, the all core inflation was about, let's see what it is, excuse me here. All items less food and energy was 0.3% month to month and 6.5% year over year. And you can see part of the weakness in core inflation, the non-food and energy inflation figure, had to do with a 3.8% decline in used car sales. So if you go back to March, April, May, June of 2021, what you saw were high petroleum energy prices and high used car sales. Those were both in north of 40% in the second quarter of last year. So you're seeing some moderation of core inflation, non-food and energy. Prices are staying high and they will stay high, but they may not rise as sharply as they were last year. So we're kind of looking at a market and inflation figures that are in line with what we expected. And we do think that the percentage change in prices starting in the second quarter will be slower. You'll see the April figures in mid-May and the May figures in mid-June and June figures in mid-July. And that will be that period of the second quarter of last year when prices had already risen. And that'll be very telling to see what happens. We'll probably still have a war premium on some commodities at that time, but I'll talk about the war premium in a second. One last thing. Here's the link to the PDF of the Bureau of Labor Statistics March 2022 Consumer Expenditures Report, or the Consumer Price Index Report. It's only about 37 pages long, and frankly, most of it is charts and tables, so you shouldn't be afraid to read it. There are about 5 pages that explain some of the methodologies and issues there. I bring it up because I think it's really useful. And a lot of times when I'm in debates with people who talk about how bogus the BLS CPI is, you find out they never actually read this stuff. They really don't know a lot about it. They rely on people who have preconceived notions of what inflation ought to be, and they find and they manipulate the data to support their belief system as opposed to looking at the data, understanding what it is. I bring this up because in the last 24 hours, I've watched a couple videos where people were saying, hey, why doesn't the CPI include mortgages? And another one where somebody said, why doesn't the CPI include rent? Those are both the wrong question. The proper question is, does the CPI include mortgages and does the CPI include rent? And the answer in both instances is yes, they do. And if you looked at the report and you went through the pages of line by line information about what the price surveys were, the thousands of people spread around the country who voluntarily fill out a survey every month saying, this is what I paid for rent, mortgage, food, guavas, fruit, meat, bread. You would understand better what the CPI is, what it represents, what information it gives you, and why all of those people who say it's garbage data are wrong. It's worth reading. It's not that scary. It's 37 pages, but like I said, it's only really 5 pages of text, 6 pages of text with the front on it, a couple nice charts that I just showed you, the table, and then this table that is about 30 pages long, which gives you a breakdown. And then you can bore people at cocktail parties the way I do. The highest inflation since the early 1980s, since 1982, 1981. I've used this chart before. I'm going to use it again. I updated it for March. Yes, we're at the highest inflation since 1981 now. And in 1981, when we were at 8.5% headline inflation, we were coming down from 14% after being above 5% for 14 years. We of 5% for about 6 months now. The inflation that we're seeing today has virtually nothing to do with the inflation that we saw in 1970s. It has as much to do with the inflation that we saw in the 1970s as the US economy today has to do with what the economy looked like in the 1970s. Radically different world. And we're seeing a short-term, 1 year, 2 years spike in inflation. We'll see what happens in the longer term. And you can tell me I was wrong in 14 years. Okay? To look at inflation a little bit beyond the CPI, because there's two interesting charts. And again, I apologize for the quality of them. These charts are taken directly from the CME's website. This is the wheat price. And as we all know now, Ukraine, known as the breadbasket of Europe, produces a lot of wheat. And the Russian troops have been burning the wheat fields there. You can see that wheat prices were pretty flat until the Russians invaded Ukraine. And the price of wheat shot up really sharply on the CME, wholesale wheat prices. Since that time, they've given up half of what you would call that war premium, but they stay very high. Wheat is, of course, a perennial crop. The Ukraine and Russia both are very important growers and exporters of wheat. They feed large parts of the world, and the wheat crop is going to be pretty much non-existent in Ukraine this year. And there may well be some constraints in getting wheat out of Russia too, depending on how the war proceeds over the next 9 months. So you're seeing the wheat price have this massive war premium, and it's given up half of that after a couple weeks of the initial war, but it's still very high. Contrast that with petroleum. Now, yeah, President Biden keeps talking about how the high oil prices are because of Russia's invasion of Ukraine. But the reality is that oil prices had risen about 50% before the invasion. Some of that might have been concern about a potential invasion, but most of it had to do with strong demand for oil in the United States and other parts of the world, a reluctance to further increase production on the part of Saudi Arabia and various OPEC countries, a reduction in US production for a variety of reasons, some political, some economic, some corporate, in the United States. So the oil price had already risen from about $65 a barrel to about $95 a barrel before the Russians invaded. After the Russians invaded, it went from about $95 to $125, rising another 33%, but about the same amount in dollar terms as it had risen in the 4 months prior to the invasion. The oil price, unlike wheat, has given up its war premium. It is back to where it was at the start. Why? Because the oil market has decided that oil supplies from Russia probably are not going to be interrupted. And they're not going to be interrupted by the Russians, and they're not going to be interrupted by the Western Europeans. And the oil market is fungible, and you're seeing increases of exports of oil to other countries that will gladly take up the slack. So the oil market is saying, hey, the war might continue for a long period of time, but it's probably not going to interrupt and interfere with the flow of petroleum from around the world. The wheat market is saying, no, this war is causing ongoing problems that are going to be a problem until the war is over and Ukraine can be resettled and crops can grow. That's really what I wanted to talk about today. You can buy our yearbooks. We came out with our gold yearbook last week. We will be coming out with our silver yearbook on May 10th. And we have our platinum yearbook in late June. You can go online to our website and buy those. They come out as ebooks. You can buy last year's reports now, and you can pre-order the silver and platinum yearbooks, and you can buy our gold yearbook for 2022. We do have a retail investment program. We have a variety of other products and research, and you can go to our website and see all sorts of free reads, old studies, old reports, special commentaries, as well as videos that we've done. That's all I have for today. I'll talk to you again on Friday, and maybe we'll focus more specifically on gold and or silver at that time. Take care, and take care of everybody around you.